Welcome. My name is Van Richards. I'm a chartered financial consultant, and I'm here today to talk to you about stocks and how that I can help you to identify stocks that will help you to accomplish your different financial goals, to help you to find stocks that will do whatever you want them to do. There'll be growth, there'll be income. I'm here to help you identify those. And today we have a special stock that we're going to be talking about today. We're going to be talking about GE. Now, there's been a lot of things that have been going on in the past week. I haven't been on the air for over a week because of the great freeze or terrible freeze, whatever you want to call it, that we had here in Texas. And as I sat here and froze a week ago, we didn't have power, water, anything like that. And I found it very interesting to think, sitting there in the dark and the cold, what companies are either going to get hurt by this or are going to benefit by this. And when I started thinking about it, my phone, as long as I could keep it going, I used it and looked it up, different things. And I found that actually GE is one of the companies that I think is actually going to benefit from this. So I want to begin starting today, and we're going to talk about that a great deal as we go through today's daily stock analysis. So let's go ahead and begin. Thank you a lot for joining me today. If this is your first time to visit, welcome. I'd like to ask you, if you like this information, if you gain some value from it, subscribe, because I try to bring you content on a regular basis that's going to help you in your journey of finances. Now, the very first thing I want to do, though, is I want to thank the sponsor that we had today, which is actually my company. It is Richards Financial Planning. Now, if you're frustrated with the direction of your financial planning, of your finances, Richards Financial Planning can help you. Go over to richardsfinancialplanning.com and you can learn more about what I've created, which is the prosperous planning process. That's at richardsfinancialplanning.com. Now, as I went through last week, it was kind of interesting because it was really cold. And I know that a lot of you, if you live in any type of climate that gets cold, you understand, that it gets snowy and whatnot. And I was having a conversation with a gentleman that's a viewer in Turkey and said, I can't be on the air for a few days because of the freezing weather. And he said, yeah, I understand that. We've got freezing weather here too. And I get it. We all have freezing weather, but this one was extreme, to say the least. And let me just give you an idea. I thought of how could I describe this to you, because you've gone through cold before. But when you go to the refrigerator today and you open up that refrigerator, it's about 40 degrees inside that refrigerator. Now, the freezer's a different story. That was outside my house. Inside the refrigerator, it's about 40 some degrees. Think of just getting inside that refrigerator, closing the door, and living there for 3 days. That's basically what my family did. And the only thing that kept us warm was a gas fireplace, because in Texas, we really don't have severe winters. So we get a little spoiled from that standpoint. Yeah, that's our fault, but our houses are not really accustomed to that. As I sat here and I was thinking about what is going on, why is this happening? The first thing that happened was the CenterPoint Energy told us, hey, we're going to be out to fix the lines as soon as we can. So we thought, well, it's just going to be because there's ice on the lines. Then we come to find out that's not really the reason why that the electricity was off. That's not the reason why that the water was off. There's another reason that was in there. And the contributing factors are these. I have them on the screen. If you're listening, I'm going to go through them real quickly. Frozen wellheads for gas and oil was one of the contributing factors. Failing wind turbines was another one. And that's one of the things we're going to focus on just a little bit today is wind turbines. And I'm not here on a mission to trash wind energy. I'm also not here on a mission to hold the banner out and say this is the future of energy. I think that it has its place, and with GE, it has its potential for profit. So I want to talk about that today, and that's why I'm going through this in the very beginning, because what I think is I want to identify the circumstances and kind of portray the picture that's going to be going forward. So you can see if this stock has more potential to benefit from the Texas disaster that we had that just occurred. Now, I don't want to discount at all what happened here, because there were about 50 people in total that died. There was a 11-year-old boy in Conroe, Texas that died in his sleep from hypothermia. There was an elderly man in Abilene, Texas that died in his sleep, and I believe his wife is still fighting for life. It was severe, and it's something that should not happen again. And I think that GE is going to be one of those companies that's going to help not just states like Texas, but it's going to be able to help in the infrastructure throughout the country, if not throughout the world. So failing turbines weren't really the only thing that caused the disaster that occurred in Texas. Gas and coal-fired plants were forced offline. Nuclear power plants, you wouldn't think that a nuclear power plant would have problems, but they have turbines that create steam, and those turbines actually got cold enough that they froze. The power grid logistics is another problem. And when I say power grid logistics, it's the fact that Texas operates in a system of deregulated energy. And it's kind of like a wholesale market where you can get the best price that you can. And that actually hurts some people. And we're going to talk about that on the next slide, because I don't think that there's very much question as to whether or not that these 5 items contributed to the power disaster that we saw last week. The next ones might be more controversial. Now, what I mean by that is power company decisions, that they made decisions not to winterize their facilities. And I think that's going to change. The wellheads could have been insulated. They didn't do that. They didn't think that they needed to. The wind turbines could have had de-icing mechanisms that were installed in it. They didn't do that. And that's actually going to be a benefit for GE in just a moment. We're going to talk a little bit more about that and give you a little bit more detail of it. The other thing is the deregulated power supply market in Texas needs some guidance, and that's going to be up to the state legislature. And one of the interesting things about power in the state of Texas is that most of it, I'd say over 90% of the power for the state of Texas, is created within the state of Texas. Now, when Texas requested to go outside of the state for more power to help the state through the polar vortex that occurred last week, there were some interesting things that occurred. The very first thing is that the U.S. Department of Energy said this. They agreed that Texas could burn more gas, more coal, which would put them above the emissions standards. And when they're above the emission standards, you have to worry about the U.S. Energy Commission, and you have to also worry about the EPA and violations from that standpoint. The thing that I found interesting, and if you want to read this, look at the show notes today, because I've got a link to it. This is the directive that was sent from the U.S. Department of Energy to Texas, and it dictated that electricity that should be bought outside of the state, that the state had to pay a minimum, that not just the state, but that energy sales companies, the energy companies that sell it to the customers, they had to charge a minimum of 1,500 megawatt hours. That's huge, because if you compare it to a year ago, in 2020, in February, it was at $18.20. That's like 6,000 or 7,000% more. That's why you hear in the news now that there are people that are getting bills that are like $15,000. And these people are accustomed to paying a bill that might be $200 for the month, but they got a $15,000 bill if their power did not go out. So in a way, if you didn't freeze to death, you might have been better that if you didn't have any power, because what you got was really expensive. The other thing is that the U.S. Department of Energy required that Texas throttle back electric production to meet emissions limits. Now go over and look at the show notes to today. If you are on whatever podcast that you're listening to this on, or if you're listening to this on YouTube, Look at the show notes because I've got links to the letter from the U.S. Department of Energy, and you can read that for yourself. But why does this really make a difference? This makes a difference because of this, a couple of things. One is how this is going to go forward. All right, here's actually, I wanted to show you this. This is part of the letter that the Department of Energy sent to the state of Texas, and it says item number 3 throughout this 4-page letter. It says this incremental amount of restricted capacity would be offered at a price of no lower than 1,500 megawatt hours. Once ERCOT declares that such an EEA level 2 or level 3 event has ended, the unit is required to immediately return to operation within the permitted limits. And I'm going to tell you a little bit more about that in just a moment, but I'm telling you what, the reason why people got such high bills in the state of Texas is not just because of energy deregulation. It's because that when the state of Texas wanted to go outside of the state to buy energy, they were forced to pay 6,000% more for it by the federal government. And that's huge. Okay. The other thing I want to bring out to you is this. This is actually the article that was from the Wall Street Journal. You talk about people that are winning and losing from this event. The title of this article, I'm not really going to go through it. You can go over to the Wall Street Journal and read it if you want to. It's called Texas Blackout Boost Australian Bank by up to $215 million. The big thing is that this Australian bank owns an energy company that's called Gritty Energy. And a spokeswoman for Gritty Energy said, an order by the state utility agency to the operator of the electricity grid was to make prices reflect the scarcity of power, pushed up prices to its customers. What that means is this is just echoing that these power companies had to charge this much money. Now, the next slide that I'm going to show you, I want to make this just a little bit bigger for you because I want you to recognize this. We're going to get off that topic of talking about why this happened. Let's talk about what's going to happen going forward. Well, for one thing, they're going to have to fix the windmills in the state of Texas and de-ice them or fix them so that they are able to self-de-ice. Now, when we talk about GE in just a moment, we're going to talk about the fact that this company has what I would call a narrow moat. We've talked about moats before. We'll talk about that in just a moment. But look at the list that's in front of you. This is a list of large wind farms in the state of Texas. And what I've done is I have identified the different companies that are involved in supplying wind turbines in Texas. The vast number of wind turbines that are in Texas are made by GE Energy, and they are maintained by GE Energy. And one of the big things, the Moat characteristics of GE is going to be that you can't switch from them really quickly. If you don't like the wind turbine that you got, you just can't take it down and build another one from another company. You have to fix what you've got. So GE has a lot of work ahead of it. You can see that there are hundreds, if not thousands, of turbines that are listed here. It has the installed capacity in megawatts, but there are thousands of different turbines that they have the potential to work on for sale. So that's going to be good. And we're going to talk a little bit more about how this company is put together. Now, I've veered off the normal course of talking to you about how the company is structured because I want you to understand and to set up how this company has potential going forward because of what happened in Texas. There's still a lot of things that are unraveling of what's going to happen in the future, but I think that GE is going to be one of those companies that's going to benefit from it. So let's divert just for a moment and get back on the track and talk a little bit more about how GE is actually organized. Now, the company itself, it's interesting because there's 3 main parts of this company. There's manufacturing, there's technology, and there's financial services. Now, the manufacturing, you could break up into aviation, healthcare. They have a metal additive division, power, and renewable energy. Now, technology is really broken up into research and digital, and the research is huge. They have research into metal additives, AI, controls, computing, sensing, robotics, software, thermosciences. They have a true depth of knowledge and research that's available at this company. The digital aspects of the company, yeah, they have a big capability in digital, but it's really to tie everything together. Financial services is licensing their products, licensing their technology, and their capital is to help finance the infrastructure. Now, when we're going to talk today, we're going to focus on 5 different parts of the revenue: power, renewable energy, aviation, healthcare, and capital. Now, the company itself, if you look at the value of it, this always amazes me. This company is worth about $109.42 billion, and that was today at 12:56 Eastern time. With the market where it was. The stock itself ended up today pretty good, about 0.72%. And if you compare that to yesterday, it was up about 3.99%. One of the biggest reasons is because of the positive news that's been coming out about the future of GE and what the analysts are saying. Now, if we get in the Wayback Machine and we look at this company in the past, it's had a really rocky history. If you go back to 2010, the company was valued at about $194.9 billion. It grew to a behemoth company in 2015 when Jeffrey Lee Emmett was the CEO, and it was worth about $314.9 billion. And they stubbed their toe when they merged with the French company Alstom. And we'll talk about that just a little bit because the value has decreased where it is today. And actually yesterday, when I did this slide, it was at 111.2 billion. I always find it interesting that just a little move in the market, this company is down $1 billion in a day, but that's because it's a very valuable company. Now, how did that affect the share price? It's interesting. I read an article just a few moments ago or briefed through it that is on Jeffrey Emmett's new book that's out. And it's an interview that's from Barron's. I didn't read the whole article. I'll get into that a little bit more later on. But what it basically was telling was about his history with the company. And he was at the company when they started their downfall. I know that when they were going after the French company Alstom, that it was a bidding war at that point, but it was a bad idea because if you look at the screen that's in front of you, the spaghetti graph, in 2010, the stock was valued at $13.42 a share, and it grew all the way up in 2015 at the height to about $27 and let's say 6 or 7 cents. Now, it's interesting. One of the first comments that I read in this article that was an interview with the past CEO, one of the first commentators said, "This guy owes me X thousands of dollars because of all the money that I lost." Yeah, you might think of that, but that's basically the Wall Street game. You have to look at it that there's companies up and there's companies down. But the idea today is not what happened in 2015, but has the new CEO been able to turn this company around and get it to a profitable standpoint? And we always have to remember that the past performance is not going to be a guarantee of the future results. And as we get further into looking at how this company has the potential going forward, we focus on 3 things. We focus on the stability, the earnings, and the competitiveness of the company. And this company, in my opinion, has a narrow moat. Now, what is a moat? A moat was made really popular back when Warren Buffett started to popularize it and to use that concept. And it's really that invisible barrier that's between the company and their competitors. And there's 3 main barriers that stand between GE and its competitors. And I mentioned one of them just a few moments ago when I talked about the switching cost. I think that what's going to happen is that all those wind turbines that are out in West Texas, they have to be fixed now. And it's going to cost something, and that's going to be a benefit for GE because they're the company that's going to fix them. You just can't switch to another company if you have a huge wind turbine. You fix what you've got, you go back to the company that created it and ask them to winterize it. They also have a significant bank of proprietary assets, and they have a cost advantage because of their size. And that's a big advantage for a company like GE when they're competition. Now, briefly, what I want to do is run through their revenues. I'm going to go through the overall revenue from 2019 to 2020, and then I'm going to break it down in those 5 divisions I talked about just a few moments ago. In 2019, they had $95.215 billion. That fell 16% down to $79.619 billion. Now, you might be thinking, hey, I don't want to get on a sinking ship, but maybe the ship's rising. It's one of those things. Is this the glass is half empty or the glass that's half full. Now let's look more at some of the more prominent divisions. This is not everything. This is what I think is the 5 most prominent divisions. And these were highlighted in the company's annual report, which is referenced in today's show notes. If you're interested in that, go over to today's show notes that are listed on whatever podcast that you're listening to this through, or on YouTube if you're watching on YouTube. In the power division was down about 5%. And when we go and look at aviation, some people would really think that this is the crown jewel of GE. I think there's also some room for more growth in healthcare and in the renewables, which we're going to talk about in just a minute. But the aviation was off quite a bit. And you could think about why that is. It's basically because of the pandemic and people aren't flying any place. So it was down about 32% for the past year. Now, when we get that, the capital of the company, remember that's the licensing and the insurance, and they do have a company that sold long-term health care, which has got some issues going on. Now, I kind of chuckled when I did this because I looked at it and thought, okay, how much off is the capital? Well, I didn't do the percentage because GE in their annual report didn't do it. And it's interesting how different companies report things, because they didn't even give you a percentage of what it's off. They just put a U there and said undesirable. They lost $1.71 billion last year. Yeah, I'd say that's undesirable. But let's go to the positive side of this and look at the healthcare. Healthcare was up. They were a shining star. They were up 4% at $17.58 billion. And then when we look at the renewable energy, which was kind of what I've been focusing on because of what happened in Texas, even without what happened in Texas and the potential for more wind energy going forward and more renewable energy going forward, it was up 4% to $15.666 billion. Now, I know that a lot of you out there think about short interest because of what's going on with GameStop and what's going on with AMC. So I thought that I would bring this into the picture because I want to point out that this is not a company that you have to worry about being shorted. For one thing, it's too big. The shares outstanding, there are 8.767.94 or 8,767.94 billion shares outstanding. Their float is 8,696.98. Now, that actually means the number of shares that people own, not company owned. The shares that are shorted, there's only about 90.32 million shares that are shorted. That's only about a 2% float, folks. What that means is that the ratio of shorted shares to shares that are in the market is about 1.08. That's low when you compare it to like GameStop that was over 100%. So don't worry about it. Now, let's look, though, at what some of the financial aspects are going forward in this company. And I think it's really important to look at a really simple ratio. You should look at this with every company that you look into, and that's the current ratio. It's the current liabilities, the current assets over the current liabilities. Now, GE has a current ratio of 1.72. Between 1 and 2 is considered good. The average for the electronics industry and components industry is 2.36. So they're doing pretty well on that. Debt equity, they owe a lot of money. That Alstom deal that they had back from 2015 is an albatross around their neck. We're going to talk about that in a little bit as a bearish concept going forward. But the debt equity ratio right now for GE is at about 2.11. Why that's bad? The average company that's similar to GE, it's 0.53. So they do owe a lot of money, and going forward, they're going to have profits. But we're going to talk about that cash flow and how that's going to help that in just a moment. So what's happened with earnings? Remember, we talk about the stability and the earnings of a company. We'll get to the competitiveness in just a moment. But the earnings are good. The earnings have been pretty consistent, even though the value has stunk. If we go back to 2014, it was kind of flat in that time period where they had the Alstom merger, but it's done pretty well over the past year since the new CEO has taken over, and the potential going forward is actually really pretty good. But we have to remember always, the past performance is not going to be a guarantee of future results. Now, I love dividends, and I'm not going to ring the dividend bell because this is not something to get excited about, but it's a little bit of a dividend. It's 0.33%. And although that dividends are not guaranteed, I'm going to stop for just a moment. I've talked a whole bunch, and I'm going to mention our second sponsor of the day. Our second sponsor of the day is Advice for Life Insurance. You need family insurance to protect your family. And you can find the best life insurance at the lowest prices in less than 5 minutes at adviceforlifeinsurance.com. And I do thank them for their support as a sponsor. Okay, let's talk about the bullish and the bearish aspects. All right, let's get the bulls going. What's going on from a bullish standpoint? What are the analysts saying? Right now, the analysts are saying that aviation and healthcare are a gem. They are undervalued, and the fundamental momentum going forward is really good. And you saw just a moment ago, healthcare. I would also add in there the renewables. Aviation was down so much, but I think that what the analysts are looking at is that it's fairly valued. It's a fairly valued part of the company, and that we're getting to the end of the coronavirus pandemic effect on the economy, and hopefully that 30-some% loss in aviation is not going to be continuing going forward. The second thing is this. The CEO, Larry Culp, has actually done an amazing job of taking this company and turning it into a lean company moving forward. The other thing is that when we look at the aviation aspects of the company, which is the largest component, the aviation fleet that has been created by GE is actually the newest and youngest fleet in the entire aviation industry, and that has the lowest potential for maintenance going forward. But we got to look at those bears and think, what are the bears saying about what's going on with GE right now? The first characteristic that we look at that's bearish, that some analysts are bringing out, is that GE is such a large company that they have a lot of unknown risk going ahead, like COVID-19's long-term effect on the aerospace industry. How's that going to affect the revenues in the future? The second thing that you have to be concerned about is that GE Capital is just an albatross around GE's profits. I don't know if they can spin it off or not, but if you were actually to separate GE Capital, it would probably be a negative value company right now. So that's a problem for them. The other thing is, and I've talked about this just a little bit, the 2014, 2015, actually that says 1215, that shouldn't be that, should be 2015 acquisition of the French industrial giant Alstom was a bust. There's no other ways to look at that. Now, when you read the article in Barron's that I referenced just a little bit ago, that was the past CEO was saying, it was a bidding war for this company. Well, what they were trying to do is they were betting on gas as being the future for the energy industry, and they were wrong. And they paid way too much money for the company, and it's actually been an albatross around the profits of the company since 2015, and that's why the value sunk by about two-thirds to where they are right now. Now, let's look at actually what the valuations are, because the valuations, I go back to Morningstar when I look and I'm trying to figure out, is this a fairly priced company? The current value is at $12.59. I know it says $12.60 right here, but the value today as it closed was at $12.59. The fair market value that Morningstar is putting on this company is really about $11.80. So it's a really close range. They're rating it 3 stars. Now, remember, the star rating service, ladies and gentlemen, the star rating service for stocks is vastly different than it is for mutual funds. You can't use the same parameters. The star rating system that Morningstar puts forth on stocks is more toward just the value. It may be more than that. They may say so, but I personally think that it's more focused on value in itself. Now, what are some of the different analysts saying out there? The big news, and one of the things that's made this stock go up, I'm going to reference the article in just a moment, and I've got a link to it in the show notes today, is that Goldman Sachs came out and said, hey, this stock's got a lot more to grow. They're looking at a value between $14 and $15, and they're the most optimistic. Now, if you look at the most pessimistic analyst out there, that would be Deutsche Bank. But you also have to look at Deutsche Bank's review is back from October of 2020, and Goldman Sachs was just yesterday. So the idea is that I think that personally, I would look at Goldman Sachs' opinion because they have more ideas going forward about what's happening with this company. Now, this is actually a link to the Goldman report that was in Barron's. And here's the key point on the Goldman report. The article says, and this is a quote from the article, it says about 60% of analysts covering the company rated the shares at buy in March of 2020. That's before the pandemic. Now, almost 70% of analysts rate the shares at a buy, while the average buy rating ratio for stocks in the Dow Jones Industrials is about 57%. So there's a very optimistic outlook going on out there. Now, also, this is the article, this is actually the review that is from Morningstar. The analyst, Joshua Aguilar, said this. This was his title, folks. GE knocks the cover off the ball with the latest fourth quarter cash flow results. And a quote from the article basically took a quote from their annual report, and it says GE's, this is a quote from their annual report, it says GE's 2021 industrial free cash flow guide calls for $2.5 billion to $4.5 billion of industrial free cash flow, which is a meaningful above our prior expectations of $1.9 billion for 2021. And that's the reason why this stock has been on a tear. Let's compare it to see what else is out there, because GE does have competitors, and Siemens is one of them. They're an industrial conglomerate that's huge like GE. And if we look at the spaghetti graph that I put up on the screen, actually over the past year, Siemens has beat the socks off of GE. They're up close to 50%. But when we compare it to other companies like RWE is actually a renewable energy company, and they're one of the ones that got hurt more from the bad weather that hit Texas. If you look at the spaghetti graph that's in front of you, and if you see the downward turn, you can see that what's been going up has been General Electric, and what has been going down has been RWE. And there's even an article that's out there that states that RWE is expecting a hit to their next quarter's revenues because of the problems that have happened in Texas. Now, Raytheon is another company that competes with General Electric, not in the same avenue, more in the aerospace industry, and they've had kind of a flat year, so we could say that General Electric has beat them considerably. Now, let's look at how GE has compared to the sector that they're in. And what I did is, and if you're looking at this on the screen, and I'll describe this to those of you that are listening on the podcast, let's look at the year to date. I know that we're only toward the end of February, but this is why we want to look at GE, because year to date, GE is up 15.74%. They're on a tear going up. Compared to their sector, which is specialty industrial and machinery, is up only 3.73%, and compared to the US market, it's only up 4.29%. So if we think about this, the stability of the company going forward, even though that we've gotten through this craziness in Texas and the pandemic throughout the world, their price has done pretty well. And because of the free cash flow, their stability is good. Their earnings, their potential is good. Their competitiveness is outstanding. So that leads us to this question. Is this a stock that you want to put inside your portfolio or not? Well, you have to determine that, because I can't make a direct recommendation to you. But I can't tell you how great it is to get a chance to talk to you all. And I hope that if you're listening to this live, you'll let me know where you're listening from. And if you've got a stock that you'd like me to review for you, I hope that you'll put it into the comments. If you're listening to this on a replay, or if you're listening to this on a podcast, go over to YouTube and let me know what you think about the show, and let me know your comments about what you think GE may be doing. And if you have a stock that you would like me to consider, I'll take a look at it. I'm a little behind because, the freeze that we had in the past week, and I haven't been able to work for a while, but I'll get to it. Before I end, I want to stress that it's important to understand that my information is just education. It's not advice. Please take a few moments if you're listening on the podcast to listen to the disclosure, which is going to come up. And if you're watching, make sure that you read the disclosure, which is going to come up. Thanks a lot. And I hope to see you tomorrow. Have a good evening.